Hi, it's Nero here from Investment Rise, and today I want to talk about what happened to our property markets in June, what's expected to happen over the coming few months, and for you as an investor, if you're thinking about jumping in right now, have you missed the boat, or is there still some great opportunity to find property with great potential for capital growth? So we've got a lot to cover, so let's get started. First of all, what happened in June? Well, the property market seemed to just continue its almost unstoppable march upwards. Check this out. Australia's soaring property market still rising but losing momentum. CoreLogic. Now, I will come back and talk about this losing momentum and what it means, but first let's go through some of the data about what happened in June. Australia's soaring property values have increased by another five-figure sum in the space of a month, with several capitals at fresh record highs. But new data show the property boom could be showing signs of slowing down. Dwelling values are now up 13.5% over the past year, having jumped another 1.9%, about $11,000 in June, to a median of $645,454, the latest CoreLogic Home Value Index released on Thursday shows. It is the strongest annual growth since April 2004, said CoreLogic's research director Tim Lawless, with houses leading the charge. Houses recorded more than double the capital growth of units. So the strongest capital growth since April 2004. Now, just think about it for a moment. What were house prices back in 2004, which is 17 years ago, right? When Sydney and Melbourne, they're essentially half of what they are right now. And so prices are almost double what they were 17 years ago, and yet the price growth is the same. It certainly then seems to poke holes into this argument about, how can people afford property prices if they're double what they were 17 years ago, but still growing at the same rate? Now, obviously, one of the big factors helping property prices keep rising is the fact that we've got record low interest rates and lending restrictions are not as tight as they were a few years ago. But is the rate of growth in the property market starting to slow? Well, Sydney house prices over the last 12 months have risen about 20%, depending on which report you read. Now, do I believe the next 12 months we'll see another 20% growth in the Sydney market? No, I don't, right? Now, don't get me wrong. That doesn't mean that I don't believe prices won't be higher. I believe that 12 months from today, prices will be higher than they are right now, but you won't see the 20% growth that you've seen over the last 12 months. The rate of growth will be slower, all right? Now, why is that going to happen? Well, check out this article from Yahoo Finance, which says Aussie house prices surge 13.5% at the fastest yearly rise in 15 years. And in particular, what I want to do is bring you to this particular section, which says, CoreLogic head of research Eliza Owen said this rate of annual growth had not been seen in well over a decade. This is the highest annual rate of growth seen across the Australian residential property market since April 2004, when the early 2000s housing boom was winding down after a period of exceptional growth, she said. Elevated savings accumulated through COVID restrictions last year, along with a more confident consumer sector, has encouraged consumption of larger goods such as housing. This has all occurred against a backdrop of continued low mortgage rates, which is one of the most significant demand drivers. But, like many other experts, Owen doesn't believe that growth at this pace will be sustainable. There are some markets where performance is starting to ease more notably. The pace of growth seen in the best performers, Perth and Darwin, is losing steam, Owen said. The key to understanding the softer performance in these resource-based markets may be a slightly different supply-demand dynamic compared to the other capital cities and regions. And in the higher end of the market, momentum is slowing too. Growth in the top 25% of dwelling values across combined capital cities has dropped from 9.2% in the 3 months to May to 8% in the June quarter. the easing in the pace of growth at the top end of the market is another clear sign of a shift in momentum. The rest of the market tends to follow movements at the high end, and this is the first time in 9 months that the higher tier growth rate has not accelerated. Okay, so what that says is markets that are very much dependent on single industries, like the resources boom, so that's your Perth and your Darwin, rates of growth are starting to slow. I mean, Perth has been one of the softer performing areas, despite what that article says, over the last 12 months. And I think that even though prices will rise in Perth, it's not going to compare with some of the capital growth you'll see in other areas. It certainly looks like Darwin is starting to slow as well. Then on the flip side, we're seeing the higher end, often driven by your premier suburbs in Melbourne or Sydney. The rate of growth is starting to slow. Okay, so therefore, as an investor, does it mean that you've missed out? No, but it does mean that you just need to be a bit more careful in doing your due diligence. You need to start looking at areas where demand is greater than supply, so there are more people moving into the area. The areas that you're looking to buy in, that they have multiple industries feeding them, so there's good potential for jobs growth. You need to start looking at the rental vacancy, which is tight across the country, yes, but you want to make sure that you don't buy an area where, sure, the vacancy rate may be low, but it's increasing steeply, which means it may be low today, but 6 months' time, you may be at risk of being in oversupply. Okay, so there are some great opportunities, yes, but I also believe, though, that some of the smaller, middle-of-the-range areas are going to do a lot better. For example, from an affordability perspective, think about this. If you're someone who has a borrowing capacity of $800,000 and you're living in Sydney, unfortunately, if you're looking to buy a house, and especially looking to buy an investment property, that's not going to stretch very far at all. Okay, so what are your options? Well, you're probably then going to want to look to either maybe Newcastle, for example, where you can get something for under $700,000, stronger rent, or maybe look up in Brisbane, where you can get something under $600,000 with extremely strong rents and good potential for capital growth. Right? And so what I see is, as more and more investors are now jumping on board, seeing how the capital growth is in the market, I think those more affordable locations where there is still good population growth, good jobs growth, that don't just buy somewhere just because it's cheap, but also look at the other factors contribute to higher price growth. I think those areas will start to outperform over the next 12 months. So I think there are some really, really great opportunities. But overall, do I think, though, the property boom is going to come to a grinding halt? Not at all. And the reason for that is primarily because we still don't have enough properties available for everybody who wants to buy. Check out this article. Housing gridlock. New listings fall as property owners won't sell if they can't buy. It's gridlock. Large swathes of the nation's housing market have ground almost to a standstill, with the number of new listings being put up for sale slumping last month. Mostly because vendors fear they, in turn, won't be able to find anything to buy. Many are also reluctant to put their homes on the market in winter, traditionally one of the slowest times of the year, compounding the problem. And with demand still far outweighing supply of stock, experts say there's not much relief in sight until spring breaks and more sellers decide to chance their luck. There's so much pent-up demand out there, but while vendors are all thinking it's a good time to sell, they know it isn't a good time to buy, said Nick Boyd, head of growth at Bell Property Australasia. It's like a traffic jam. No one can move and more buyers are joining the backlog. Sellers know they'll get a fantastic price, as we've seen stunning price growth over the last 9 months, but that can equally put a hesitation into the sellers' minds, knowing there might not be much out there for them. So as long as we have these continued shortages of stock, okay, prices will continue to rise. All right, let me give you a pretty simple example. Let's just say there are 100 people out there looking for properties, but there are only 60 properties available to buy. Well, as long as 60 out of the 100 people looking for property can afford the prices being asked for, then 60 properties will sell, probably at a higher price, okay? And so therefore, because demand is outstripping supply, there's 100 people wanting properties, but only 60 properties available, prices will continue to rise. Sure, they may rise more slowly, especially in more expensive markets like Sydney and Melbourne, but they will continue to rise. So while many people are talking about affordability issues, and yes, that can be an issue going forwards. The fact that there isn't enough supply yet to meet the demand, there aren't enough properties available for people who want to live, means that I still expect the price rises are going to continue. You're going to see different markets performing differently, so do your due diligence. But as an investor, if you can find property in a good growth location where the rents are covering the mortgage and those opportunities are still available in 2021, then from my perspective, you're actually hitting the gold mine, because you're getting rental income each and every month that's giving you a bit extra above and beyond your mortgage, plus you're buying in a market with great growth potential. Certainly seems like that's the kind of opportunity you'd want to get, don't you?
Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a half-hour phone consult with me personally. Either way, thanks again for watching.